Good afternoon, everyone. This is Corey Hinkle here, and I'll be your host today for the Ankerstar Wealth Daily Update. Unfortunately, last night we did become aware of some geopolitical tensions taking place in the Middle East, and that rattled markets initially, especially so in the overnight session. We're going to take a look at markets today. We're going to try to look at how is that activity impacting U.S. markets right now, if at all. And we're going to look at a few different things that are going on independent of that, such as a strong reaction in Adobe stock, some payment processing stocks that are on the move today, and a little bit more. So before I get started, I want to remind everyone that this is a financial education presentation. You must do your own due diligence before acting on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and mine alone. All right, so quick look at the market. You could see that we opened down, so it's called a gap down. We gapped down, particularly so overnight. We were down about 1.8, 1.9% at the lows last night. We sold off into the morning, potentially around some fears related to the geopolitical activities we saw in the Middle East last night. And then we've been kind of recovering throughout the day. So at times like this, whenever you're seeing tension or war-based activity taking place, you want to remind yourself of this, which comes from First Trust, which is war times and the stock market. Historically speaking, war activities or geopolitical tensions have not been a truly sell the news indicator. It's not something that speaks to what is or will happen in the market moving forward. So typically it represents an opportunity to buy at a little bit lower prices. And, of course, no one wants to see anything like what happened last night, but is this just the fact of the matter is that markets do recover from these things over time, and we expect that to be the case again here. And again, we're looking at this as investors, right? Okay, here's looking around the S&P 500 today. So we kind of want to see how much of today's activity is related to the geopolitical events versus not. So you can see Iran produces about 3% of global oil supply. Oil prices shot up. We'll look at that in a second. But you can see that some of these other energy names are shooting up alongside the price of oil going up. As it's suspected that higher oil prices could benefit their profit margins and their net income if the prices remain elevated for a long period of time. You're also seeing some of those bright green in the industrials, aerospace, and defense. So any companies that are related to the defense industry are benefiting somewhat today, as potentially their products might be in higher demand as it relates to any geopolitical tensions taking place in the world. It's unfortunate, of course, but it's just the reality that we're observing in the market today. Another one related to that defense is Palantir. So Palantir has been increasing in its relationship with particularly the U.S. government and the U.S. defense industry, or the U.S. defense part of our government. So they're a beneficiary, or viewed as a beneficiary. Elsewhere, Tesla's up nicely on some, I think it was Trump trying to encourage governments to be a little bit more lax with local governments to be a little bit more relaxed on approving Tesla's autonomous driving technology. So that could be that's not really related to geopolitical anything, right? That's just a local story for Tesla, or an individual story for Tesla. You see Oracle up big. That's also on the back of those amazing earnings that were released this week. So again, that's not a macro related move. That's a company specific move. You are seeing a ton of some specific weakness in Adobe. That's a company specific move. We're going to look at that. Should Adobe really be down 6% today? And then you've got in financial services, Visa, MasterCard, PayPal, American Express, all getting hit really hard today on some very interesting stablecoin news. So that's what we're seeing in the market today. How much of this is truly geopolitical or geopolitical driven moves? It's not really a lot. It's more company specific and industry specific moves, just digesting the news of the day. All right, so again, I did want to highlight oil has moved higher here to the tune of about 6%. This is a year-to-date chart. You can see that some of those companies, Chevron, Exxon, ConocoPhillips, they weren't up as much as oil. They weren't up 6% today. Part of that is because they weren't down quite as much as oil has been, because they have pretty stable business models, and they would need oil prices to get to 80, 85, 90 to really get a ton of investor excitement around those specific oil companies like a Chevron, Exxon, or ConocoPhillips. Anything in the 65 to 75 range is really more of a longer term average that we've observed. So it's a big move for today, but it's not like a historically high price. Now, as a consumer out there, you probably don't want to see this go too much higher, but we'll see what happens. Okay, did want to hit on Adobe. So Adobe down 6% today. Adobe has a little bit of the same problem that a Google has, where investors are wondering what will happen to demand for their products as AI becomes further integrated into people's lives and becomes more and more capable over time. It's my belief that I do understand a little bit of that thought process around maybe the marginal user of an Adobe product. If someone's just generating like a basic YouTube thumbnail or a basic picture or something, AI is going to be a help for that, and it might cause a little bit less demand to flow through to a full adoption of Adobe's products. But at the same time, anyone who wants truly customized, maybe company-specific marketing materials, etc., anyone who wants something like that, Adobe is still going to be the place where you can integrate logos or really get things customized for what you actually want. Some of the chat GPTs, they might give you a few options. You could pick between this, that, and the other. But Adobe is going to allow you to take a generative image, a generated image, edit it, customize it, enhance it to get your exact desired end result. So is Adobe's business really under threat? That's what people think. Here's what's interesting. Adobe achieved record revenue of $5.87 billion in its second quarter of fiscal year 2025, which is 11% year-over-year growth. I will say that is slightly slower growth than what we're maybe used to seeing from Adobe. Adobe's a really strong double-digit grower historically. Diluted earnings per share was $3.94 on a GAAP basis and $5.06 on a non-GAAP basis. I do want to mention that they beat expectations on both of those numbers. Cash flow from operations were $2.19 billion. What do I think about the risks specific to Adobe here? As I mentioned, I do wonder some about their marginal user, so there could be some risk there. When I do the math on Adobe, I would feel more comfortable buying it anywhere below $150 billion market cap. I think as of right now, it's right around 167, maybe 170. So I'd want a little bit better. They call that like a margin of error or a cushion there. I'd want a little bit safer entry point, given that their revenues are still in the low 20 billions a year, but they do have amazing margins on those revenues. So it's all, you bake all that in, I would feel comfortable at a somewhere below a 150 billion market cap. It's still not quite cheap enough for me to be really excited about it, given the risks presented by AI. But I can also mention, Adobe has done a really good job integrating AI to this point and will likely continue to do so. All right, and why were Visa, MasterCard, American Express, and others down today? It was because Walmart and Amazon are exploring stable coins as a way for their customers to pay. So according to a Wall Street Journal report, Walmart and Amazon are actively exploring the issuance of their stable coins, marking a potential paradigm shift in the how high volume merchants handle payments. This move could fundamentally disrupt the traditional payments ecosystem by allowing retailers to bypass legacy card networks entirely. So they're waiting on the passage of the Genius Act, and this is going to be really interesting story to follow as it plays out, because if Walmart and Amazon are able to bypass that fee that has been baked into every transaction for the last 20 plus years as credit card adoption has increased, that's going to do wonders for their margins, and it's going to cripple the growth of some of those payment processors that have been payment processors benefit from everything. They benefit from inflation, they benefit from increased spend, they benefit from credit card adoption. So they've been kind of a perfect investment for so long now, and if this hampers that or throws a wrench into that, it's going to be extremely interesting to follow. So that's what we have today. Are the moves today based around geopolitical tensions in the market? I would argue that for the most part, no, they are not. These are normal market moves today. The market is just digesting and processing information as it comes, and that's all we have. So thanks for visiting with us today, and we will see you tomorrow.